Speaking about massive volumes of data, the new Kraken regulations now that they're looking for all of the data from US taxpayers, $20,000 per year. So is that total proceeds? Like one Bitcoin in 2017 was $19,000. If I just trade that plus one Ethereum, I'm now over that limit. And that now leaks all of my data, all transaction history to the IRS.
Yes. The number of $20,000 that comes from the 1099 rules. So they're basically gathering the unreported 1099 information for all prior years going back to 2016, which is interesting that the IRS is still going after 2016, 2017. So, if you have unreported taxes there, it's still an area where the IRS feels it can go after. So let's say you move to Kraken, $8,000. You had $8,000 worth of fiat and you bought ETH. And then you took that 8,000 and you went over and you bought DAO. You converted it all for DAO, and then you converted it to Link. All right. Proceeds of those, you have the 8,000 that you went to DAO, 8,000 they went to Link. Let's say you did another transaction, you took that Link and you swapped it for XRP. So now you have an $8,000 of XRP. How much assets do you have? $8,000. How much are they going to report on this information? What's it going to look like? It's going to look like a deposit of 8,000 plus trading of 24,000. So that will be reported as $24,000 of proceeds that you received, and that's how the IRS is going to look at it. They don't necessarily know from that data, maybe from the Kraken data, but most people's trading lives are more complicated. That they will not necessarily. They're going to be looking to see that your tax return, that you reported at least $24,000 worth of proceeds. Now, they won't know that you had $24,000 worth of cost and had zero gain in that whole scenario. Mm-hmm. All they're going to know about is the $24,000 of proceeds. Then they're going to look at your tax return and they go, like, this guy reported at least $24,000 in proceeds from capital gains activities. And if he didn't report anything, or he just reported $8,000, well, it has a high likelihood of triggering an audit, at least getting you set up to be a person of interest for auditing.
And they're saying that over 75% are not reporting. I mean, I'm sure that number is even way higher going back to 16. It was complete wild west. What's the advice for someone who falls into that area? What do you recommend? You want to get amending returns straight away, probably.
Well, if you thought tax compliance was tough in the past, you haven't seen the future, and it's going to get worse. And the question for that 75% who have not been reporting or underreporting is, how do I get into compliance? And it starts by making a conscious decision that you're going to have to live in a compliant world. It's too tough to not be compliant for a long-term basis. So I would say make a firm decision, a New Year's resolution, if you will, that when you file your taxes, that you honestly report all your crypto income. Then I would recommend, especially if you're a larger trader, over a couple 100,000 in assets, is if you have a significant past gain calculation you haven't reported, is to maybe recalculate it all right now, at least know exactly what it is. If you can't do it yourself, you should hire a full service firm like ours to do that gain calculation and just do all of it. Even if you don't report the prior years at this time, but at least you know what you owe, and then you can start to move towards increased compliance in filing and amending tax returns, as you have the finances to do that. I should mention that you're required by law to report on your original tax return all your income. And if you get audited and it hasn't been corrected, then you're subject to penalties and possible fines.
Thank you very much for listening to today's show, and I hope you enjoy it. Please give us comments. We would love to respond to any questions you give us. If you have tax questions that we can apply to, we will try to address it in future shows. Please hit like, subscribe, follow. Thank you. Have a great day.
The Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by cryptotaxaudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn or whale investor? Nothing is too complicated for the experts at cryptotaxaudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive audit defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like audit defense membership. Go to cryptotaxaudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.